Yeah, now, one of the sources of volatility recently has been the Japanese bond market. And I even saw Treasury Secretary Bessent comment on it a few days ago. Um, what's going on from a kind of a macro perspective with Japan, and how does Bitcoin and perpetual preferreds, potentially fit into that dynamic?
Yeah, I think we would. I mean, lower interest rates are, I think, better no matter what region you're in. But Japan is very much indebted at the government level. This I don't think is going to change all that much. Um, it's interesting that a lot of the kind of equity market you know tumultuous sort of bouts have been in tandem with the Japanese bond market over the last 24 months or so. When you've kind of seen the Japanese bond market or yields get a bit spicy, you see US tech and Bitcoin and a bunch of other things have kind of little spasms until something is some solution is found. I think it's we like to focus on Japan, but in terms of bond markets and macro, I think we're just living the same story as the U.S. kind of saw a few years ago. This is a global phenomenon, and so it's not so much that we've at our shareholder meetings we've had questions of like, well, um, is this something about the yen or what? And our answer is no. This is a global fiat problem, and so it's not so much about the yen or the dollar or the euro in particular. This is just fiat currency, and the supply will always increase, and so there will be monetary debasement. There will be inflation pressures. It's unique in Japan because it just hasn't been seen in about 4 decades. And so there is this kind of this push and pull between the fiscal and the monetary, and the monetary was so dominant for so long, and now we're seeing the fiscal reemerge. And so I think there's going to be probably some coordinated response, with G7s or with global central banks, because the Japanese bond market, seeing yields rise doesn't just affect Japanese markets. It affects U.S. markets, and there's a lot of hedge fund managers that are using yen and buying dollar assets and whatnot. So I think this is a global problem, whether we like it or not. But yeah, no, I mean, I think it's business as usual for us. We obviously would like to get our preferreds, out and running, and whatever the Japanese bond market does, we'll we'll do what we can and control what we can control. Ultimately, we can't really do too much about central bank rates.
I mentioned earlier that Japan is very yield starved. What that looks like is for the average saver in Japan, the interest that they're earning on their yen is about, correct me if I'm wrong, like 50 basis points, 0.5%. So the opportunity for the preferreds in Japan are really incredible. In the US, Strategy and SATA have their preferreds that are paying around 10 to 12% interest, which I would call 2 to 3x what an average US saver or investor would expect to get in interest from a bank at this point. In Japan, what we're targeting for the preferreds is something like 4.9%, which would be about 10x what the average Japanese saver would expect to receive in interest. So I think the opportunity for the preferreds in Japan are really groundbreaking, and it's still significantly lower interest than what the U.S. preferreds are targeting right now.
Yeah, and that's the 50 basis point figure. This is sort of a relatively new development. There's like half of the Japanese household wealth, like $6 or $7 trillion equivalent, is in cash at the household level, and it's not even earning 50 basis points. It's earning nothing. Like it's literally in bank CDs. And so with Japanese short rates now, I think are 50, 75 basis points. Money market funds have reemerged in Japan for the first time in 10 years. And that's at 50 basis points. And it's a big deal, 50 basis points. But most people, I think the blended average savings rate is like 14 basis points. Um, and so, yeah, even a 5-6% yield on a stretch equivalent, we're calling it Mars, Metaplanet Adjustable Rate Security. I think that's going to be the killer app. Our convertible preferred, which we also want to IPO, that's going to be volatile, right? So it's going to be correlated to Bitcoin. It's going to be correlated to Metaplanet. there's going to be that upside. There is that duration risk. Ultimately, I think the big idea is that, strip the volatility and have something that sort of feels like a cash-like instrument, even if it is technically, a perpetuity. So that's what we're really, really focused on. And the good news is, because Saylor and Strategy and now Strive have gone on this journey before us, we've had a lot of time to be able to educate our shareholders. So educate them about, because a lot of our investors are new investors, right? We thought we would be pulling in, the thesis originally was, we're going to find Bitcoiners in Tokyo and Japan that are interested, and then they're going to be in Metaplanet investors. What we didn't foresee was that Metaplanet was going to actually be introducing a lot of people to Bitcoin. So these are a lot of new investors. These, it's a wide ranging demographic: young, old, male, female, housewives, salarymen. But it is, there is a kind of a pretty large new class of investors. And so explaining a capital structure, explaining debt as senior and then common equity and preferreds in between, and it's a bit of a hybrid instrument. So it's been an interesting kind of an exciting point for us to be able to educate people on sort of this niche topic of preferred stock, right? It's usually it's like the part in the investing handbook that you skip, right? It's the boring section. And so being able to kind of explain this and educate before we IPO and before hopefully potentially we IPO, it's been a good process, and I think it's going to pay dividends when we launch.
Yeah, that's a really interesting perspective that you brought on how this is driving Bitcoin adoption, because I think that the OG Bitcoiners sometimes feel like what Bitcoin treasury companies are telling them is, sell your Bitcoin and buy our stock, right? And or like, so they're always trying to draw this comparison of, here's why owning Bitcoin directly is better than owning the stock. They can't put themselves in the shoes of somebody who wants to own Bitcoin in a corporate wrapper, because it's so alien to them, because of, I think, for ideological reasons, right? That here in America, we're sovereign individuals, we're libertarians, we do everything ourselves, we pull ourselves up by our bootstraps. I imagine in Japan, the idea of, hey, we're on a team, we're going to work together, we're going to collaborate, we're going to have a governance process around this, we're going to have a committee, we're going to socialize this, essentially, or in the lowercase socialize, and that that's really appealing. And obviously, there's plenty of people in the United States that they also like capitalism, they like capital markets, and they see the opportunity to have Bitcoin integrated into them. But it does seem like there's almost a culture war within Bitcoin over whether this is pure or not.
Yeah, I think that's I saw there was a kind of this culture war podcast drama thing last week. I think the rift is our little echo chamber of Bitcoin people, this Bitcoin hive mind. It's not representative of the actual global population or even the investing population. In Japan, at least, what I could say is, and I don't have the actual data, but empirically, or anecdotally rather, we've brought much more people to buy their first Bitcoin than have ever sold Bitcoin to buy Metaplanet. Right. It's like the impetus is, hey, Metaplanet's going viral on the Yahoo Finance stock boards, or the Momentum, Tokyo stock trading, rankings. And then people trade it and they say, what does this company do? And then there's oh, they're the Bitcoin company. They're the what? And so this is, I think, something where, the investing base, we're introducing the asset class to a new investor base, plain and simple. It's not like the Bitcoiners in Tokyo, the 200,000 of them now are only buying and selling Metaplanet. No. That's not what's happening. We're broadening out this thesis to people that never had thought of it like this. It's oh, what are they doing? That's crazy, but I sort of love how bold and courageous they are, and they're doing something new. They're trailblazers, right? So, and also we're at the same time, we're encouraging people. We're not saying, hey, just invest in our company. We're saying, no. If you like investing in our company, read this guide, read this article, watch this series. Here, buy a cold hardware wallet, hold your own keys, learn about self-sovereignty. So it's not mutually exclusive. And I think it's a false dichotomy to pretend it is. Ultimately, what did you think Bitcoin winning looks like? It's not just like we all clutch our hardware wallets, and there's a time and a place for that, and there is absolutely, that is absolutely Bitcoin winning. That's what it looks like. But it also looks like being the most successful ETF in the history of Wall Street, dominating the corporate landscape, entrenching itself in the fixed income markets, right? It's all of those things, and I think people are a bit idealistic sometimes and miss the forest for the trees.